What's going on, everybody? Hopefully you're doing absolutely amazing. Welcome back to the channel. Thank you so much for being here. If you're here for the first time, my name is Dr. B. Looking forward to serving you. Today, we're going to go over our market analysis for this upcoming week. I'm going to give you some tickers that I'm watching, my overall analysis of the fundamentals or our CPI and PPI reports that we had last week. And going into this week, some data that's looming, our FOMC meeting that's coming, and also some things for my beginners that are just starting, some slower movers or some potential swing trades that we may be having on our horizon. So all that being said, let's jump into the charts. Thank y'all so much. Again, this message and this video is sponsored by Leverage Club. This is my Leverage University Club. And what we do in here is we teach entrepreneurs and thought leaders how to become better mentally, physically, emotionally, financially. And this is our financial sector where we have our trading floor. And inside of our trading floor, you can see over here, we have all the news and data that we need. And as a disclaimer, this is not financial advice. I've been doing this for well over 6 years. And for those that have been inside of our community and seen the results, our trade wins are sitting right here where we have a plethora of wins of people posting continuous wins that they have inside of our community while they're at work or doing other things full time in our live trading as well. We have our watch list and other things. So if you want to join our community here where you get live trading and our signals, and ultimately my big important thing here is the question, can I learn? Can I learn? And here are where all my trainings are to get started with understanding how to read the stock market, fundamental analysis, technical analysis, and ultimately what we do in here is we options trade. All right. First thing I'm going to go over is our fundamental analysis, which is the news. All right. What is the news saying? Which we wanted to pay attention to it, but ultimately I'm more of a technical investor, so I don't want to read too much into it. All right, so I have the S&P 500, I've got the Dow Jones, and ultimately the NASDAQ and the Russell 2000 pulled up here. Over the last 5 days, we have now had our first red week in the last 5 weeks. And we see here that we're slightly down. Ultimately, big tech is taking a hit here, which was expected because we've been taking a significant run from our Magnificent Seven, or for some may say Magnificent Six. That's still, up for debate. But NASDAQ is taking a little hit here, 1.5%. Dow Jones down 0.16%, S&P 0.24%, and the Russell 2000, or our small cap companies, are still looking fairly strong, just taking a little slight pullback there. If we look in the 1 month chart, we can see that we're still overall bullish. So I am not coming on here saying this is a bear case. I'm not bearish at all right now, but I am looking for, like many people that are doing this as well, is looking for a healthy pullback. We are well overextended on our RSI, or relative strength index. And overall, we're looking for a healthy pullback to make sure that we can continue strong for the remainder of this election year and going into 2025. And ultimately, as we go forward through this, you'll see that the fundamental analysis, we're still have inflation that's looming here as we continue for inflation to come down to that 2% rate that the Fed wants. We still need to figure out if we are headed in that direction for rate cuts sooner than expected, or do we need to have a potential rate hike, or are we pushing them back? Right now, our sentiment from the data that we just previously had, which is our CPI and PPI reports, they were a little bit higher than expected. Let's jump into those really quick here. And our consumer price index from last week, we were expected to be around 0.3%, if you can see there. And we jumped a little bit higher than expected to that 0.4%, which pulled the market back. A little bit of fear mongering in the market, but we rallied back pretty strong for that Wednesday and Thursday. And why we did that is because we had a couple of Fed speakers on Wednesday that were insinuating that, hey, don't worry too much. We're taking into consideration your CPI report, but we are still not relying heavily on that CPI report to push the rate cuts back just yet. We're still expecting them to potentially, not obviously not being in March like they were expected to be, but being in May, potentially June. So that date is still on the horizon. Now we still have the FOMC meeting, the meeting of those Fed presidents and the council, and ultimately Federal Reserve Chairman Powell, to report on that date mid-March. So this is important data for us to be a little bit, cautious about, but we've got to remind ourselves that we're still in an overall bull market. Okay. So we got CPI, we've got PPI as well that came out on Friday. And typically PPI is a little bit better or can be a little bit better than CPI, but this came out even high. So we saw another bearish, short-term bearish sentiment for last Friday. Now, at the time of this recording on Sunday from last week, you can see as we jump into the charts in just a second that we are closed tomorrow, or at the time of this recording, Monday, right, for President's Day. And we may have that healthy pullback, right, to a demand zone or a support zone for a couple of our indexes and some of our stocks that we're watching. Okay. So I do expect a little bit of relief coming into this week, rallying back a little bit. But if we get any more bearish sentiment short term, right, we could fall a little bit further than expected. All right. So let's jump into our fear and greed index. We have this emotional indicator, especially for my newer individuals. Thank y'all so much for being here. If you're new, if you need to learn this skill set, there'll be some links down below and there'll be some resources for you. Okay. Our fear and greed index shows the emotional sentiment of our overall market. And we can see that we're in extreme greed right now. Now, what I like to show on this is the timeline here where we can see a past resemblance of how we react at those specific levels. Now, if we come back here, April 23rd, April 2023, we can see that at February of 2023, we were sitting in that greed sector coming off of a bearish 2022 year. What did we do headed into, it looks like maybe, don't quote me on this, maybe a FOMC meeting, or just maybe heading into tax season where we're getting that normal pullback at the end of February headed into March. All right. So again, look at the resemblance here. We're sitting in greed, come back to extreme fear, and we rally for that Q2 into Q3, summertime, June, July. We get back into extreme greed. And for those that are more experienced, or if you're learning here, understand that September and October are typically bearish sentiment months for the overall market. And sometimes it can start in August. So here's what we're doing. We're following that trend year after year. And especially last year, we get into a really, really nice bullish run, right? And people are taking their profits headed into the fall, September, October sell-off season. All right. And what do? We rally back up in extreme fear and fear again, back to these highs through the Santa Claus holiday rally into the new year, where we have made a tremendous run entering into 2024, which is typically expected for an election season. All right. But here is where, again, I'm building my case, and you should look at this too, right? Just being aware that we're sitting roughly in that same sector on the fear and greed index, and we could go higher, right? This is not always going to pan out exactly year after year as expected, but we have a sentiment here sitting around 77, extreme fear. Look at, extreme greed, and look how it pushed a little bit higher. And you'll see how this looks on the charts when I'm talking about, hey, I'm not bearish just yet. We could have a little bit more room to run. All right. Put a comment down below saying, hey, I see you, Dr. B. Put your favorite emoji, put a 1 down below in the comments. Thank y'all so much for being here. And if you're enjoying this thus far, give me a like and also give me a subscribe. Maybe share this out with a person if you're enjoying this. Now, I do want to earn your trust continuously, so let's keep moving on here. So we've got our economic calendar. Let's go over what the economic calendar looks like for this upcoming week. All right. So here's February 19th. You see that we're closed for this holiday. And on Tuesday, pretty light here on our economic indicators, not paying too much attention to that. So what we could see here, again, associating the fundamental analysis, the news, the economic data into our charts or our technical analysis, and everything will start making sense. So this is where I'm looking for a potential rebound, because we don't have much data that is going to be impacting the market. So volatility or volume in the market could be a little bit low on Tuesday. People getting off a long holiday weekend, entering back into the market. We could see some buying of dips or rallying back up potentially, or we could see some continuous selling off a little bit more depending on how we react. So what I want to watch for on Tuesday is simply be a little bit more patient, see how I react off these levels that we'll see in a second. All right, Wednesday, we have a couple of Fed Powell, excuse me, not Fed Powell. We have a couple of Fed speakers. So we have Bostic, who typically moves the market pretty well. He's out of Atlanta. That's at 8 a.m. Eastern Standard Time. So luckily it's before the market. So we should get a nice reaction here. And this is a big day as well, as we'll see when we jump into our earnings for the week. And a Wednesday is a big day because that is when NVIDIA reports, I do believe, after hours. So we do have our Fed minutes, FOMC minutes that will be read from our January report. So we should get some nice action here during power hour, the last couple of hours of the market. We have another federal speaker at 1. So afternoon on Wednesday could be very active, very volatile. Also, we could have a lot of consolidation or sideways movement. So I want to be very mindful of Wednesday, looking like a pretty decent day to trade. But everyone's waiting on those looming earnings from NVIDIA. So Thursday and Friday are the big days where I think the direction will be signaled. We will know a clear direction after NVIDIA reports. All right. So Thursday, we have initial jobs claims. That's an important data report. If you don't know what that is essentially saying how many people are filing for unemployment and gives us a good sentiment of our job market. Existing home sales and a couple of Fed speakers here. And as you see here, nothing on Friday. So I'm looking for more so lighter, because it's a short week again, lighter trading on Tuesday and Wednesday, waiting for that nice NVIDIA earnings report, trading Thursday and potentially a continuation into Friday, and see how we finish off the week. All right. It is a short week, so be mindful of that. And we are entering into the end of the month and heading into some pretty key data here with our FOMC meeting going into the middle of March. All right. We have PCE coming next week, so we should get some nice movement for the end of this week and into next week continuation. All right, make sure I go over here. Let's jump into our earnings. All right, so I'm gonna jump into our Discord here and just show you exactly that we try to help everybody out as much as possible. So all the finance news that we have here, our economic calendar, I try to post for the remainder of the week, and then our earnings calendar coming up this week. All right, so let's jump into the earnings that we have for this week. Walmart, Home Depot. All right, Palo Alto could be very interesting here. Okay, cybersecurity, Palo Alto, I'll be taking a look at them. But here is that big NVIDIA beast right here that's reporting right after close. So NVIDIA moves the market very significantly. As we know, it is now taking a market cap. I think it is overtaken Amazon at the time of this recording. Okay, and as sitting third largest market cap company in the world, right? So I want to be mindful of that. Okay, that it will significantly move the market and also its sector as well. So it is in the semiconductor sector. So I do want to watch AMD. As well as a little bit more speculative plays such as SMCI, ARM, and some others, SOXL, if you're familiar with those. So what are some other kind of side watches? A Square or Block, that could be very interesting there. Wayfair typically gets a pretty decent response from volume on their earnings or just in general day to day. Carvana, right? The chart on Wayfair looks pretty good. Carvana's chart looks pretty good as well. So these are the main ones I'm looking at. And when we're looking at this for my newbies, I should say, when I'm looking at earnings, there's two ways to play earnings. And I'm not going to go in depth on this particular video because this is the market analysis. But when you're looking at earnings, there's a lot of opportunities to, as we call, trade before earnings or the run up to earnings. But when earnings report, they could go either way. It is a sentiment of how the projection or guidance of the company is going to be going forward, and also their earnings per share and also their revenue and some other indicators of how they've been reporting from the previous quarter. So trading options or trading in general, short-term investing before earnings can be fairly risky, right? So we call it lottos, LOTTO, because it is technically a gamble, right? The skill set of trading is not gambling, but when you're looking at trading earnings, it could have a great earnings and it could be priced in, it could come down. It could have a poor earnings, right? And it's already been gotten beaten down and rise back up because everyone wants to buy the dip on that company. So it can be very, very volatile. So what do we do in this community in Leverage Club and our university and other programs that we have? Right, we typically trade after earnings, but hey, if the contract price is right and it's looking pretty decent, it could be a high reward. Okay. So I will take a look at that to see if I may want to sneak something in there for a pre-earnings lotto. All right. So there's our earnings. There's our fundamental analysis. Let's jump into our technicals. Okay. Our technical analysis is where the money is made, which is on the charts. Okay. So a couple of tickers that I want to go ahead and put on your radar so you understand where we're headed. So we go along this journey together. Number one, I want to go over all the indices, okay? SPY, QQQ, IWM, all right? I do want to go over a couple of the blue chip companies. Tesla, high watch this week. Very good setup overall. I want to look at Apple. It's sitting right in demand, okay, that you'll see in a second. And then I want to look at a couple of others. Meta was very strong this past week, so I want to take a look at them. Netflix showed some weakness on Friday, kind of faked some people out, right? But still fairly strong. And then some others as well. AMD kind of side watch from NVIDIA's earnings. So I want to keep an eye on AMD. Amazon's very interesting as well because Amazon has been pulling back, is sitting almost at a gap fill. But I like the upside of Amazon right now, and I want to kind of take a look at that. Some side watches for you, some swing trade opportunities to go ahead and jot down and put on your list. We're going to go over CVS, all right? We're going to go over Nike as well, UPS, and then Celsius, right? If you like Celsius energy drinks, for those that do, those that don't, some that don't know what it is, right? Their chart looks pretty good. Retail is doing very well right now. So Walmart reporting earnings this week, as you saw on the earnings report. And also you saw that there was, we haven't seen it yet, but Target's chart looks absolutely amazing, especially for my Target lovers. Shout out to all the Target lovers out there that love to spend all day in Target for things that you don't need. Right? So all that being said, just want to give you a roadmap really quick. And let's jump into these charts. All right, let's jump over SPY. All right, overall, let me shrink my big head over here. Overall, you can see that this now is making sense from that fundamental news analysis, right? We can see here that on a weekly chart, okay, I'm on a weekly time frame here. We're still very bullish all the way coming from this September, October sell-off that we had, right? Just healthy pullback here. And then we absolutely ripped for the past 4 months. Okay. Excuse me, 3, 4, 5 months, really, right? 4.5 months. We've been absolutely ripping, right? Q4, and then now into the first half of Q1 2024. So you can see this is what I mean. We're still in a bullish market. We've only had one red week, right? In the past 5 weeks, this is what I was talking about, that this is our first red week here on a weekly chart. So this is a time to pay attention. Because if this is our last red week here, what are we going to do? Are we going to pull back a little bit more healthy here? Or are we going to just have a little healthy pullback very silently and then rip again? Right? That's why I'm not ruling out any more upside, because we are just so bullish. All right. So the second signal that I have here is this nice hammer candle that is formed on a week. Even though this candle is red, right? A hammer candle is a bullish sentiment candle. It means we have a long wick, right? Where buyers have stepped in. This used to be a very solid red candle pushed all the way down here. And then it got bought back up and it closed up at the highs. So we ticked down into 489 and then we got bought back up into 499, which is where we closed on Friday. So that is signaling that there's still a lot of buyers that are present in our market, and we want to be very cautious of this downside, this fear mongering in our market for right now. So hopefully this is making sense. I want to check in with you again. Comment down below your favorite stock Let me know what you are trading right now. Let me know what you're looking at. I want to hear that down below in the comments. All right. Let's jump into the 4-hour chart and look at SPY, give you some exact levels of trading that I will be looking for this week. Okay. The line in the sand, you can see we have this double top here right around 503, 502. We double topped and we're coming back down into this demand area. Now, the first line in the sand, we have a micro demand right here around this 495, right? I like this demand a little bit better around 489, 490. Okay, so 495 is a place to watch and react to. So 495 to 496. Okay, so 495 to 496. Okay, you see that candle close right here, 495.93. So if I round it to a nice round number, we've got 495 to 496 as a demand zone, a micro demand zone right in that area. So how would you trade that? You would look for a reaction to come down into that area, right? For those that are fairly new, right, or those that need a little bit reminder, for me, this dark black area is market open, and then the light gray area is after hours or market close. So you can see the reaction, what's happening here in after hours. So I would draw here a candle. If we push down into that demand area and I see a wick off of that area, right? Excuse my drawings there, right? You get the gist right there. Okay. If I see a wick coming off that area, right, and this candle begins to turn green, it goes to green to red. It forms a nice hammer candle, maybe like that. And this is meant to be in the middle of this. Okay. So nice hammer candle. It looks something like that candle right there. If I see a wick again off of there, I know that it may want to bounce off of that area and just retrace back to this pivot point here, which might be 498.50. Okay, so that's another line in the sand. So that's a small trading area, about a $3 move from 195, 190, excuse me, 495, 496 up to that top area there, 498.50. All right. So I like that area, but I'd rather just wait and be patient around that area. Okay. I like this 489, 490, essentially repeating CPI. Okay. So this was CPI data when it came in hotter than expected. And then we got PPI data that came out that we could start to form a little bit of a higher low. So we may not fall all the way back to this 490 area, which is why I'm thinking that we may bounce at this 495, 496. Okay. And then I'll be looking for that trending back up to these highs. Right. And then again, like I said, it's forming that hammer candle. So it could shake out some bears, right? Have a nice bear trap down here. And then we just trend back up to the highs. And maybe potentially, who knows, right? If NVIDIA has really good earnings this week, right, we could trend up to that 506, right? Potentially psychological level, 505 first. And then maybe we just trend. Who knows? Like, we are still very much in a bullish market. But again, as a reminder, let me remind you here that fear and greed index. Remember that we have still more room to run. This is just a sign. It does not mean that it's going to play out exactly. We can't time the top. We can't time the bottom. We can only react. So who knows? We're at 77. We could push a little bit higher, which would push us into extreme greed, right? Look at this right here, extreme greed all the way up into 82, right? Which would make sense on SPY. We could push higher. All right. So that is what I'm looking at. So I'm not looking at really shorting the market until we may pass past this 490 area. Now, if we come over to SPX, right, we can see that 5,000 SPX level. And also we've got ES, which is our futures, right, sitting above 5,000. So as long as we're above 5,000 on ES and SPX, I'm not really looking to short the market just yet, unless we push back up into highs and I can see some bearish sentiment or some sellers present up in that area. Okay, so the middle of the range, I'm a little bit more patient. And then the top of the range and bottom of the range, I'm just going to watch and see if they fall and get a reaction one way or the other. Again, as a reminder, as short-term investors, especially with options, we react. We don't gamble. We're not guessing where the top is, where the bottom is. We're drawing our demand areas, we're drawing our supply or resistance areas, and we're reacting off of those areas to trade the price action to the upside or the downside, okay? Managing our risk, okay? If all these terms seem confusing to you, if you don't know any of them, it's making little to no sense and you're trying to get it, please make sure that you check those links down below and make sure you're joining inside of our Discord. Like I showed you before, we've got all the trainings here ready for you to go. And there's also a trial for you to jump in and get started. So here's trading trainings. Again, all these trainings in here for you where I'm going over everything. All right. Let's keep going. All right. So there's SPY. Everyone good? Awesome. Awesome. Let's jump into QQQ. All right, QQQ or the NASDAQ, okay, our tech index. As you can see, a little bit weaker here. Now you're seeing the correlation again from a fundamental analysis going back here to this data. You can see that NASDAQ in the last week, right, went down 1.5% versus the S&P only 0.24%. So now it's making sense on the charts, okay? Our tech indexes are very highly overextended, okay, but they're also still very strong. Right? So I do not want to short again QQQ unless it pops back up into these highs and we see how it reacts. So I wouldn't short QQQ unless we get back up into this 435, 436, 437 area and we react off of there. Okay, I'd rather wait for a demand bounce since we're still in a bull market. So I want to look for this reaction here. I want to look for a push down into 424, 425, a nice double bottom there, right? And then enter and looking for a nice trend to the upside. Okay. So that is what I'm looking for QQQ, a reaction off of that 424, 425 area for a nice demand bounce. Otherwise, we could see, and for those, again, demand bounce, we're looking for calls, okay? Calls off of support. It's in demand, okay? People want to buy low, sell high. All right. Or I'm looking for a breakdown completely below that 425 level. I want to see a candle close, a nice retest, can't get back above 425, and then take it down. And we could fall all the way back down to this 415, 416 area. Okay. So I am looking for that as well. Okay. But again, I need to see a very, very strong sentiment. Essentially, NVIDIA, in my opinion, needs to just absolutely tank their earnings for me to want to short QQQ just yet, okay? Or the overall market just yet. So that's why I want to be a little bit more patient, even though you see this nice bearish sentiment. So if you're fairly new and you've traded options before and you're looking at, puts, it's going down. Should I play puts? No, we're still in an overall bullish market. I would only play puts if we push back into highs and then we can short. Okay. Awesome. QQQ. There we go. The line in the sand for QQQ. If it can reclaim 430, so we close at 430. If I see a nice reclaim of 430, then we push down here, right? Come back up, and then I see a nice break, retest, then can take it back up. Then I would look for calls above 430 for a nice break and a retest hold above 430. Okay. Now, again, I understand for those that are looking at this as across a couple of days, I'm looking at this to potentially be in the same day. Okay. So it may happen across the week, but this could be shrunken or shrunk into this on this day right here. So it looks something like this, right? Push down into there, right? Reclaim up to the top and then take it back up. Okay. So that's within one day. So we look like that, right? Oh, another long position, if we get above 440, just say a NVIDIA clears, right? You can enter above this 438 area, okay? With a nice candle close, a nice break and a retest above 438. If we get strong and NVIDIA reports strong earnings, and we can look to maybe trend and continuation for the remainder of the week on Thursday and Friday, all right? So there we go. There's QQQ. Now, IWM, very, very strong. We're starting to see a lot of movement from certain stocks in the tech space and also our S&P 500 and some of the companies that have been running continuously that are at all-time highs, we're starting to see a little bit of profit taking and moving into those small cap companies. So SMCI, which I know a lot of people have gotten a lot of hype about, I'm not going to go over that too much in detail. I'll mention it briefly, but just look at their chart if we don't get into it. All right. But IWM really quick. I want to see a hold above 200, okay, to take it up back to highs. Now we could look at IWM for a potential long position, but again, I'm still a little bit hesitant going to FOMC, but still putting time on your contract. Okay, so if you're looking at options here, I'm on the options chain. And if you're Robinhood or if you're new to this, right, I understand this looks a little bit different. I do use Webull, okay, for my main day trading platform. Okay, so I'll come in here and I'll look at a weekly contract on IWM because it's a short week. Okay, and I may look at these in the monies right here. If we pull back into that 200 range, this contract is going to change price a little bit. So maybe it'll be 250 or below. I would like that 200 in the money contract for the week. Carry a couple of contracts, maybe swing a couple of contracts potentially, as IWM still looks very, very strong above 200. Now, do not get bear trapped or faked out if it ticks below 199, excuse me, below 200. Okay. So if it fills this gap and ticks down into 199, right, it might be a shakeout. So even though it's below 200, still watch for the reaction. So what I would watch for is a nice breakdown below 200. Okay. Come down here, break down below 200. All right. Let me go back to a 4-hour chart. Okay. There we go. Nice tick down below. You can see we're in this nice trend channel here. And just say we get a little bit weak, right? And I'm looking at this nice trend channel holding up at this demand around 196, 197. Ultimately, that 197 is the line in the sand. I want to see a reaction off that 197 level. And then we'll just shake out the bears and then trend back up because we are in an overall bull market and it's still strong. Okay. So take out those highs. It wants to head to that 205 level. If we look back on a weekly chart, we can see that IWM wants to go to that ultimate 205, 206 level. And then once we start getting comfortable above that 205 level, we're just kind of off for the races back to these all-time highs here at 237. All right. So we're starting to see we started to see this trend channel here that was just trending all the way back to 2022, just back from 158 all the way to 201, back and forth and back and forth and back and forth. And what you see here now is that we're starting to make this nice bullish flag here to take out this 205 level and then just trend all the way to 210, 215, 220, and ultimately this high here at 237. That's why I like IWM a lot right now, as money is shifting into the small cap companies and the small cap companies are starting to build some momentum. All right. So put your favorite emoji again down in the chat, down in the comments. Thank you so much for being here again. I appreciate you. Give me a like, give me a comment if you're enjoying this content. And now what we're going to do is I'm going to very briefly but powerfully go over some of the tickers that I was mentioning earlier that we were on our roadmap. So let's jump into Tesla. Tesla right now looking very, very bullish. Okay, looking very, very bullish. First thing that I see here that you may have seen in various other places or other content creators or traders or short-term investors that you look at is this nice inverse head and shoulders that you can see forming here, right here, coming down, basing at that 181 level, not really getting below that 180 level. Okay. It ticked down below here, that 175, a nice buy up there, nice buyers waiting to grab that liquidity or just demand right there at 175. And then it started to form this nice inverse head and shoulders. You could not get any cleaner of a chart. And I know there's a lot of eyeballs on this right now. So what are we looking at? We're at a neckline here. And for those that are new, I want to slow down just a little bit so you understand what I'm talking about. Inverse head and shoulders pattern. Let's look at it. Okay. Let's look at maybe this one. Maybe this one. Okay. Yeah, I like this one. It's just a little bit cleaner. Left shoulder or the first shoulder, head, second shoulder or right shoulder, we break above, as we call the neckline here, this dotted line, and then we retest. Now, you tell me, does that not look exactly like this Tesla chart? So what are we doing? We're coming back to retest this neckline. So what I'm doing is I'm watching now for a reaction. I don't want to jump the gun, but it looks really, really good. And also on a very highly traded, high volume stock that everyone is got their eyeballs on. Everyone's itching for Tesla to just, they either love it or hate it, but most people love it, okay, because it makes them a lot of money. So I want to see a retest of really this 196, 197 level. If we start seeing wicks, kind of like what we did here on Friday, right? It just consolidated, which is expected, right? But this was a nice wick off that 197.40 level right there. And it really didn't want to go back to that neckline at 196, even tick down into 195.50. It really didn't want to get back to this, right? So I want to just watch to see if really this is the line in the sand, right? Maybe it doesn't want. So I may look at getting some starter positions. And for those that are looking to know, if you're more savvy with this, you know what I mean by that is mean I start to enter into a position very lightly. So here's an example. Okay. If I'm trading Tesla this week, I may look at it maybe at the 200 calls or the 205 calls, depending on your account size. And I'm looking at this and I may click on it and I may grab one contract, right? I may grab one contract, two contracts, three contracts, whatever a small position is. And then if I start seeing it build and build and build, right? Or if it falls a little bit lower, I have room to add to that position. So I can add a couple more contracts at more of a discount. Okay. So Tesla moves so quickly that when it moves, it moves. So I don't mind entering into a position with a very highly probable A plus setup here, high probability for it to get into it a little bit early, right? Because again, going back to this, look at this, right? I know that neckline is where my stop loss is. So even if I get in a little bit, I know exactly where that stop loss, if it can't build momentum, it wants to take out that high. Okay, so that's one trade. Catch it here. Another trade could be above this 202.50 level, really above 203. If you see above 203, you know it's going to trend back up to the highs of 205.40. And ultimately, if it breaks 205, we're just off to the races and we're moving to 206 and potentially to this 210 level. And who knows? We could just squeeze and squeeze. We don't know how much Tesla may want to run after it starts breaking out, if and when it does. All right. So we just want to be in position, ready to go. But my profit target on Tesla is definitely through this gap fill here, right to that 207 even number. Okay. 207. Let me look at the options. Yeah, 207.50, then 210. So a little hack there. Sometimes your strike prices can be the target that it may want to trend up to. Okay. So 207, 207.50, and maybe squeeze into 208, 210. Okay. That is where I'm going to be trimming some profits. Now, I will be looking to re-enter if we retest back to maybe 205. Okay. Now, final thing on Tesla, line in the sand is above this 221 level. Okay, I'll put a yellow mark there. That's the line in the sand. Dr. B, what do you mean by line in the sand? This is the move. If I turn on my moving averages here, if we get above 221, okay, we get above that 200-day moving average, this blue line right here, then we'll start squeezing back up into highs, right? It may look like this. Okay, we'll start squeezing back up into highs and we'll get a nice bullish green candle there. And then we'll get a nice retest of that level. Okay. And then we'll just start squeezing. And then we're back into like bullish range, right? Heading back up into highs and maybe breaking out of this trend channel here that you see that I have on Tesla. Okay. So there's my levels on Tesla. I like it a lot for a day trade this week. I like it a lot for shares or equity purchases, meaning just buying a share of Tesla underneath $200, depending on your financial situation. Okay, again, disclaimer: this is not financial advice. This is just me talking to you with a level of skill set and expertise. Please do your own due diligence, but you can see here that I'm building a case on some of these positions and stocks and indexes. All right, let me turn this off here. We're good on Tesla. Right, another one I want to take a look at is Apple. Okay, Apple this week. All right, line in the sand, or a very key level, we can see that the demand area here, or when Apple's in demand, there's a lot of reactions here around this 180 level. Former resistance, right, now became support. Couldn't get above that 180 level there. Couldn't get back above that 180 level most recently back in October of 2023. Got resisted, broke through it, went all the way up almost to 200, got rejected back down. Now we're using this 180 as support. Okay. We also have got this nice trend channel here, this nice trend line from lows that we could hold up as well. So this is very pivotal for Apple to hold up this 180 level. Okay, if we start getting candle closures and SPY gets weak and we start breaking below this 180, okay, significantly, okay, I need a candle closure, right? I need a solid 5 minute to 15-minute candle. I like to day trade personally, so I typically look for a nice 5 minute candle closure below that 180 and seeing if there's a retest. And if we can't get back above 180 and we start to get weak, then yes, we are coming down to that 176, 175 level. Okay. So it's not saying that Apple's dying. It's not saying that it's going to crap. It's just saying that, hey, it's a healthy pullback. And it's something to watch because we're sitting in a nice area of demand. Now, another thing that's happening with Apple is it got some bad news recently, right? It got hit with this $540 million fine over music streaming. Just wild. Just Apple still has a China problem. You see all this fear mongering that's going on here. Please be mindful that yes, it is true news, but it's also manipulative in a way because we know that Apple is bullish, right? Overall, long term. So, what we can see here is that in an overall bullish market, healthy pullback, I want to buy the dip. So, whether that be shares underneath 180, I can pick up some shares. Or if I'm still bullish with trading on Apple, I want to wait till it drops down to that demand area back in this 175, 176, see if I can get some reaction off of that and then play it back to the upside. Now, if you're comfortable playing puts, okay, meaning we can make money when the stock market goes down, right? Putting the phone down, picking up the phone to call, then yes, you can play puts to the downside and you can get a nice move down to that 177, 176 area is where I would start trimming some profits because it could easily get snatched back up. Look at this, right? People tried to short this right here, right? A nice bear trap into this area here, right? People took it down, maybe didn't trim profits because they were like Apple below 180, it's going, right? But it got bought back up very cleanly there. So be mindful. That's why I'm looking for that nice candle closure. Maybe you even want to consider a candle closure below this low here, which would be that 179 level. So if we get a candle closure below 179, maybe that's a better entry for a short position. Okay. Now, look at the amount of volume on the upside on some of these contracts within our options chain. All right, a lot of open interest and a lot of volume on the upside. So you can see here also that we're seeing a sentiment from our own technical analysis that there's a lot of bullish flow at this demand area. Okay, a lot of bullish flow at this demand area. If I click over here to where is it? Option statistics. This is the Webull platform. So if you need a link down below, it'll be linked. I think there's it's a couple free shares or stocks or whatever it might be. If you have another link, you're more than welcome, but it will support me highly if you want to join this platform and see all this information that you can get. So you see this call flow here ratio between calls and puts. The flow is very bullish, right? On the call side, picking up the phone, wanting the position to go up. So that's what's giving me a sentiment that we could potentially have a bearish shakeout and then we rip back up to the upside, potentially with that SPY sentiment bouncing off its demand, and then we start trending back up, which will take us all the way back up, ultimately to that 187 level, and then ultimately back up to that 190 plus level. Okay. So there is my sentiment on Apple. All right. On Apple. I'll do a couple more and then I want to speed through some of the others and just get you out of here. Thank you so much for being here. I appreciate your time as always. I want to make sure I never like to waste my time, so I don't like to waste anyone else's time. All right. Let's jump into another one here, which was on my list. Meta was very strong last week. Okay. So I want to keep an eye on Meta here. We have a line in the sand, my yellow line here, which is that 465 level, which is a nice hold of a demand area. We can see that it was a form of resistance, right? Then broke through, came back, held this, resisted, broke through, held as a nice support, held, and then we just broke through. So now we're coming back here. I want to see how we react off this 465, right? And coming down into here. Let me draw it this way. Polyline, right? Maybe a nice double bottom there, and then we trend back up to the upside, right? And start getting some nice bear traps going, some nice higher lows. And I apologize for this horrendous drawing there, but you can see what I'm going with. It starts to hold up this yellow line, 465. Maybe it ticks down into it. But remember, right, we've got this nice trend line. We want to follow the trend. We don't want to play against the trend until the trend tells us otherwise. So you can see this trend line that we're forming these higher lows. So even if it kind of breaks below that 465, right, I want to see continuation lower before I'm getting into puts or getting bearish sentiment just yet. Meta had such an amazing earnings report, and it just is so strong right now that it's also a great buying opportunity to dollar cost average, because who knows? I mean, Meta might not fill this gap right immediately. It may try to. We've got a nice gap from earnings, but look, it tried to fill this gap here, right? Maybe tick down a little bit into that 451, got bought back up very quickly. May tick down in the gap, got bought back up very quickly. So the day trading side of it, you can short it if you'd like, if it pushes back up in this area and we get some resistance. But shorting at these lows here, I'm just not comfortable with. So be on watch for Meta to hold that 465. Watch for SPY as well. If we get a nice bounce off this demand and we could trend back up to the upside, it could be a nice trade there. All right. So there's Meta. Let's go to Amazon. All right. Amazon, I have a couple of things that I was teaching here. So I do apologize for this massive bullish candle here. You're like, what in the world? So this is called a measured move. Okay. So what we get typically is we have what we call consolidation or just a nice trend to the upside. So you see Amazon here on a weekly. Is this just been trending and trending and trending and trending? And I know you right now, you order off Amazon, you probably order off Amazon right now, okay? And you're getting the package as we speak. So we all see in the Amazon truck, it's not going anywhere. But what Amazon has been doing is expanding into new arenas, as we know, the healthcare space, AWS, streaming, AI, just so many different things that it's getting into, and it's creating some significant partnerships as of late. So I want to be mindful that after their massive earnings beat, we could see another massive push on Amazon. So from a technical basis, what I want to do here is I want to measure how massive this move is from their earnings gap, right? And you can do it two ways. You can measure it from the candle, right, closures, right, the solid candle bodies, and that'll give you a nice move or a measured move that you could have up, that it could break up to the upside. Okay. Now, if it does the whole candle move, right, we could see a nice move, which will move it up into a resistance that you'll see here, or a profit target at highs. Okay. So there is this potential, and it's not going to happen maybe in that one move, right? But you're going to see some significant bullish flow if we start to break out of this nice consolidation triangle here and we start to get some nice movement up to the upside. So what I would look for on Amazon as far as a day trade or a potential long position, an easy trade plan would be above 175 candle closure. Okay. So you see here that these candles could just not close above 175 very strong. So you want to see one of these types of candles close above 175, and then we can have an easy break and a retest and then take it back up to highs. And that could be a nice, easy potential day trade or swing trade, depending on your trading style. All right. So, what's another trade idea that we could have on Amazon? We could have these hold of lows. So, this is very similar to Meta's chart, right? Very strong company, right? Very good earnings. And what we could have here is a nice hold of this 167.50 level, or if you want to round number it, 167 level, and just hold that level. And we could get a nice demand bounce off of there if we start to form a nice wick. Okay. We start to form a nice wick off of a candle here like that. If I start seeing wicks off candles like that, right, whether it's red or it's green, it does not matter. That shows me that buyers are present. All right. So that's what I'll be looking for on Amazon this week, but I'll also be watching SPY. Another thing I'm looking at on Amazon is, you remember how we saw that inverse head and shoulders formation, okay, on Tesla earlier, which is a bullish sentiment. Another thing that I'm looking at on Amazon is I start to see this kind of head and shoulders, which is more of a kind of a short-term bearish sentiment. Okay. Now, this could play out, it could not play out, right? It could shake out people, it could just dismiss this and break to the upside. But I want to be mindful that also we have this gap to fill on the downside. So if we break below 165, yes, we could trend back to 160. All right. So that's why I'm looking at Amazon very highly, because very, very bullish company right now. Okay. A lot of news and a lot of good earnings around it. People want to buy low, sell high. So people want it to come lower. Savvy investors like myself and others, and maybe even you watching right now, you want to buy it low. You don't want to buy it at all-time highs. What you can do, non-financial advice, is you could, yes, dollar cost average up here. But right now, I've got two sentiments here going on Amazon, a very uh, potential bear trap sentiment as we saw earlier, but also I could see, a sign where it wants to have a little healthy pullback below here, starts filling that gap, comes back into 160, and then we rip back to the upside. Okay. So there's Amazon for you. Microsoft, not going to go over Microsoft. Ultimately, I will give you a level really quick for my Microsoft traders below 400. I want to watch a reaction around 400. It's just overextended, right? That's all it is, right? We got a nice double top here on a weekly, right? A big bearish weekly candle there. And hey, it looks like it wants to break that 400 level. It needs a little bit of help from SPY as well, right? Could be another shakeout, and we could just trim back up to highs. So I like more of the bullish sentiment. Reminder, we're still in an overall bullish market. Okay. So there's my main watches for the week as far as those blue chip companies. Now, for those that want to, you forgot NVIDIA. NVIDIA has earnings, right? So I personally do not like to trade anything. It's just me. For my savvy investors, for those that have different trading styles, you may trade the same week of earnings for a company, but contracts are very highly inflated, right? There's going to be, look how much these contracts are already, right? They're not really tradable. It's going to be a lot of consolidation because mentally people are preparing for it. They have a bearish sentiment. No, they're going to slightly miss. It's been overextended. It's too hyped and it's going to drop. And then you have people that are like, no, NVIDIA is a beast. It's not going anywhere. It's going to kill its earnings, right? So you have people to the upside, and we can see that kind of on the options contracts here, right? 900 with a lot of open interest and volume, right? For $400, we have a little bit of a bearish sentiment here. Not as much, but you see down to the 500, people are saying, hey, I'll put a lotto in, right, for $39 just in case it tanks, right? But that's why I didn't really mention Nvidia. So I'll trade Nvidia or the semiconductors really after earnings, which it will be on Thursday, as you saw earlier. Okay. Same thing on AMD. Now we could potentially trade AMD this week as well. I've been liking its chart. I like how it's been holding up. But again, the semiconductors have been showing a little bit of weakness. And that's just because NVIDIA is coming up on earnings and they've been having just an absolute ripping of a a sentiment lately. Okay. But what I'm seeing here is if we look on a weekly, it's just forming into this nice bullish consolidation at this demand area of 164. 164 is a very solid monthly level on AMD. So if you can see here, right, a nice candle wick there at that 164 level and a nice candle closure here previously at 167. So why in the world would I want to short AMD in the long term? Maybe some intraday, some intra-week weakness. That was a mouthful. Intraday, intra-week weakness on AMD, but I'm not trying to really short AMD long term. I want to watch how it comes back and reacts, but it has been showing a little bit of weakness, okay, in the semiconductor or the chip sector. All right. I'll go quickly through the side watches that I have. CVS, first watch here, easy trade. In my opinion, this is a nice swing trade. What I'll be looking for is a nice demand hold. Let me move my trade plan out of there. Right. CVS had an amazing earnings. It's in the healthcare sector. For those that are not too familiar with who I am, okay, I'm a former pharmacist and still have my doctorate, obviously, as you see, where the doctorate came from. So I'm very familiar with the healthcare sector. Okay. CVS, right, silently moving here, very solid chart, right, holding above this 75, 76 demand. Former support broke out, nice retest, right, into its earnings, gapped up right here from its earnings, and then now forming a nice another bull flag. I like this daily candle forming here on CVS. So what I would like, let me jump into our 4-hour chart, is I'd really like to enter somewhere around this 76. We might not get it though, okay? We closed at 77. After hours is at 76.92. So I'm not going to be too anal about my entry on this. I'm just going to maybe put time on the contract on CVS. Okay. So my stop loss on CVS would be really below this 74.50 level. Okay. Because the next area would be right around that 71, 72. Okay. So the closer I can get to 75, that'll be wonderful. But it's looking really strong right now. So two trade ideas, tick down into that 75, 50, 75 level if you can, if it pulls back there, or if you can't get that entry, find a break above 78. Okay, a break below above 78. All right, I could see a nice push, a nice candle closure above 78. And then guess what? We'll trend back up into a nice psychological level of 80. Okay, and then 82. Now, as far as the contracts that I'm looking at March 15th coming out, looking at this open interest and volume on these in the money contracts, 77.5, right? Looking at that right now, the contract prices might change at the time that you're watching this recording. So I do apologize, but maybe you could look at this at 82.5. The reason being, that's where our profit target is ultimately. Now, if we come out further to this June date here, this also has a nice level of interest on their contracts. Now, the reason why these contracts also have high levels of interest is because typically the contracts that are at the end of the quarters, okay? That's why I look at those two dates. As far as, March 22nd, March 8th, March 1st, yes, you could pick some of these contracts if you want, right? But as you start to get deeper into this game or a skill set of trading, you are looking at the contracts that have higher volume, that have tighter spreads between the bid and the ask, because that's where the money is made, right? The more volatility for short-term investors, the better, right? That's how you make more money, right? So CVS, there's your trade idea for CVS. UPS, I love this as well. Okay, this has been on a high alert for a lot of investors because it dropped down after their earnings, I do believe. Yep, earnings. Okay, but it started to form these nice higher lows here on this trend channel. And what I've been seeing intraday, now this would have been a nice area here for an entry, but a little bit soon to tell, in my opinion, right? It did form a nice candle here on the next day, and that was a nice entry to take it up from 139 all the way back up to 146. But guess what it's doing now? It's forming a nice intra-week or intraday trend channel here where we're seeing a nice hold of 141 and a nice trend to the upside. Now, here's our third potential trade idea that could come this week into next week for a nice swing. All right. So I'm going to turn this yellow here and I'm going to jump into the 4 hour. Okay. So what I'm looking for is a break and a retest. Okay. Easiest trade potential setup that you can learn: a nice bullish candle, people taking their profits, and then you are allowed to sweep or enter those lows, right, where people are just trimming their profit, or for some, panic selling. Okay, so buy low, sell high. Now I'll be looking for an entry around 146, 145.50. I'm not, just as low as I can in this zone, I'll be looking, because I know exactly where my stop loss is, which is really below this trend channel, because I know it wants to come back to that 141 area. So I'm not hesitant on trying that, because what I'll be looking for is just it trending back up to that 150. So that'll be a nice trade from 145 to 150. And ultimately, another trade idea would be a break of 150, another break and retest for continuation all the way up to the top of the trend channel and the gap fill, which would be 155. Ultimately, wants to sweep and come back up to these highs of 160. All right. So let's jump into a couple more. Nike. Nike's got its earnings on March 19th. All right. Typically, we see on solid companies that are very overall bullish, right? People love the company, they buy their products, right? It can run up until earnings. So a couple of things that I see on Nike is a nice swing trade. I see a nice bullish hammer-ish candle, not a perfect hammer, but if I zoom in, right, there you go. Now I formed it as a real hammer candle, right? Let me, for my people that are new, hammer candlestick pattern. Okay. So do you see how this looks here? This is a hammer candlestick. It can be red or it can be green, but a long wick, short body to the upside is showing that buyers are present. So I like that hammer candle on Nike that it formed on a daily. All right. Starting to get a little bit of buyers there at that 101. All right. And we may retest it one more time. We may come back. You see this candle here. We may come back and get one more tick and we start trending back to the upside. Okay. First profit target would be 107. Okay. We've got to get above that 107 area with a nice candle closure. So I need above 107, right? Something like that for it to give me a sentiment to want to go higher. As you see here, we've got a nice gap fill in the short term, which could just trend back up to that gap fill to that profit target of 107. But look at this. If we get above 107, we've got 108, and then we've got this previous candle high here from that gap down at 110. So ultimately, my full profit target potentially could be to 110. All right. But we got to get above a couple levels before we trend up to that 110. Now, if they have an amazing earnings, right, or we may start to fill a little bit of this gap into earnings, we could have, their earnings just absolutely kill and we could just jump up to there like that, right? So that's a possibility. But ultimately, right, this is a short-term trade idea. And as a reminder, into earnings, same sentiment. I don't really like trading up until earnings. That's when you want to, quote unquote, buy the rumor, sell the news. Buy pre-earnings if you want to trade it pre-earnings, lead it up to it. People have high hopes for Nike. People may take some profit off, and then hey, we'll see how we react on earnings. Okay, you can leave a runner in. For those that are new, that means that I can leave one contract for a lotto and just say, cool, I believe Nike's going up. If it goes down, all right, didn't lose, no harm, no foul, right? Because guess what? Nike just say they don't have good earnings for whatever reason. They could come up and they could have bad earnings and we could drop all the way back down, right? Like that. So that's why I personally, and for my savvy investors in here, right? That's why most people don't like or typically take some risk off leading into earnings, okay? Because it's a crapshoot, all right? So there are my three kind of side watches. There are many others. I'm not going to go through all of them on this, but some just to maybe mention. I like Celsius's chart. Okay, for those that drink Celsius energy drinks. All right, shout out to Celsius as well. If you're watching this, love the drinks. All right. but it could trend back up into the 69.70 level. So we're sitting at 64. Nice swing trade or day trade there. Lyft has a lot of potential, right, for a nice break retest. If it comes back into that 15 area demand zone, right, in this area that it broke out of, could see a nice continuation back to the upside. It's got a lot of volume, right, a lot of news sentiment. Had some interesting news from their earnings as far as their CFO making a little bit of mistake. All right. And finance is another sector that you need to take a look at, in my opinion, right? With interest rates, please be mindful that with high interest rates right now, that is benefiting more of the national banks, the JP Morgan Chases, the Wells Fargos, the Bank of Americas. Pay attention to those national banks institutions as rate cuts continue to get pushed back and we have higher rates, right? That's benefiting the bank, okay? Unfortunately, or fortunately for them, right? So be mindful of the bank or the financial institutions. We could see them very, very strong. Wells Fargo was very, very strong on last week. So I want to watch this above these highs. That could be a nice trade, especially for people who are getting introduced into trading, okay? Bank of America, Wells Fargo, very highly tradable, right? And I'm seeing it break into retest into this consolidation. And what did we say earlier on that measured move, right? That measured move that we could continue if we see signs of bullish nature. Now, I like this hammer candle that's kind of forming here on a 4 hour, right? And we could get a break out of this trend channel. So a nice trade would be above 52.44, above those highs, and then taking a nice measured move back up into 54. So another $2 move on Wells Fargo. All right. Nice clean chart there, actually. Nice clean chart. We do have some resistance up here, right? So I do want to be mindful of that. But you see that it wants to just head up to that 54, 55 range. It's broken out of previous candle closure highs right here, above this last candle closure, which was at 50. Okay. So that was our most recent candle closure high, 50, and then ultimately that 50, 54. So we broke out of that nice wick of 51, and now nice break and retest, and it could be a nice trade there. All right. Final thing, make sure I'm checking all over my stuff. Couple of things here. Side watches. Walmart has earnings. Okay. So that could be a nice trade there. They had a nice split. So they're coming up on their stock split. Okay. They're coming up on their stock split, I believe, at the end of the month. So like the 29th. So it could become some consolidation on Walmart. But I do believe, right, from experience and also for those that understand stock splits, right, that's going to make Walmart a little bit cheaper, right? And also it's going to make it very highly desirable to buy up. So we could see a nice run on Walmart's earnings or a nice pullback on Walmart's earnings, depending on how they respond. And then we could see that stock split coming in, a lot of hype on that stock split. And then also them just looking very, very bullish overall for Walmart here. All right. Made a nice run from this inverse head and shoulders, as you can see that playing out, right? We talked about that on Tesla. Nice inverse head and shoulders playing out. And that's how we're looking at it on other charts as well. All right. Robinhood, another side watch here. We've got some leaps in Robinhood inside of our community. So we've got some leaps already in. You can see here just for long term, I think it was a swing trade. All right. So well, James in here, got my eyes on January 2025, hood call, 20 strike. I also like long-term shares. So I was looking at that as well. I agreed. I said fire emoji. I said, hey, put it in the chat. I like it. Right. And we went ahead and entered into that. So, hey, when was that? Last week, right before Valentine's Day. And you can see here that a leap is a long-term option contract that's typically a year out. It can be very profitable for beat down stocks or high probability stocks that have future opportunity for growth. Okay, so let's look at where is it? Trade wins. I'll show you how much this is up already on our leaps. Okay, so you can see there that I didn't show the percentage, but grab two of them right now. Probably should have grabbed a little bit more. They were fairly cheap, and we're already up around 60 to 70% on these two contracts, and the contract doesn't end until the end of the year, into the beginning of next year. So that's the power of options contracts and also charting as well, which is technical analysis. You can spot out these things. You can make easy money, and it doesn't have to be, it can be very risk off. It can be very, very casual, right? For you to make money with these options, okay? Strategically. All right. Last thing I'll go over is crypto. Okay. Again, Bitcoin above 50K. As long as it holds above that 50,000 level, we have a nice demand area at that 48,000. So once it consolidated around that 40, gapped up over this 48,000, gapped right over to 52. And now I see that, hey, there's a little gap that might be filled. So if it fills that gap for whatever reason, profit taking, whatever it might be, we've got two scenarios. We're heading into the Bitcoin halving at the end of April going into May, which is going to be a continuation of crypto just running for roughly about a year to a year and a half in its bull run. So I want to be very mindful that, hey, we're still strong. You don't want to bet against it. You want it to pull back so you can enter, right? So it could do two things. We could pull back to 48,000, fill that gap, or we could just continuously get strong and go up to that nice psychological level of potentially 55,000 right there. Okay. So as a result of that, how do you trade the crypto mining companies and also Coinbase, right, during this time? If Bitcoin is above 50,000, we're still going to see a lot of bullish flow on Coinbase, especially after their massive earnings beat last Thursday afternoon. Okay, so after PPI data has settled off here, right, people taking their profits, you can see here that this is just a nice break and a retest of that 171, 172 area, previous resistance after hours, right, before their earnings. So what we could see here is that we could take potentially, as long as Bitcoin holds up, right, entering into this week, off tomorrow or Monday, bounce at 171 and wants to retest that high, right? Bounce at 171, retest that high, right? So it may not even come back that far, right? It's just so bullish. We may hold up this 180 level and reclaim that 180. So I could also see just a simple reclaim of 180, 183, and just trend back up to that high of 193. Nice $10 move on Coinbase. But another big move could be just break of these highs, right? Which would be these candle closures, in my opinion, 192. If we start to break above 192 with strength, we could trend up to 200 and then ultimately that 215, 216 range. Okay. So where do I get that from? If I come over to my left, right, span out, right, 215, 216 is that previous support, right? Previous support broke down, now turned resistance. So that 215 area, which it wants to head back up to. So Coinbase still very strong as long as Bitcoin holds up. Mara and Riot, same thing. Mara's support, I like right at that same demand area, almost identical chart, right around that 24 area there. I still only like day trading it personally for a lot of these crypto mining companies, picking up shares on the way down if you would like, not financial advice, right? Riot as well. I like better back at that 14 level, maybe 13, if even it drops back down to 12, right? If Bitcoin gets below 50K, that's where we'll see that pullback on the Bitcoin mining companies and Coinbase as well. Clean Spark, right? Clean Spark had an amazing earnings starting to consolidate, and we can have that nice measured move if Bitcoin just runs and we can get that nice push upwards. We could also get a nice push to the downside and we come back into this nice demand area sitting right here at 13.7. Okay. So I do like that bounce or picking up of shares right in this area of 13.7 to 14. Okay. Bitfarms is another one. Okay. Bitfarms chart, obviously very, very inexpensive. So if you're looking to get into some crypto mining, right? I like Bitfarms below $3. If we can get back down below there, if Bitcoin pulls back into this low $2 range or so, filling a couple of these gaps, getting back to these demand areas, and then ripping back to the upside. Okay. But as always, you can dollar cost average and do as you please. All right. Let me double check finally, make sure I have covered everything, making sure I've been efficient, effective, slowing down my speech as well. But I do want to know, I do want to make sure that you understand that these are market analyses. This is not full everything you should learn at one time. Okay. So that is where the university inside of our community is, and you can join with all the links below. Okay. Final thing, as far as some speculative plays. Okay. I'll end off here some speculative plays, some higher risk opportunities. All right. That I want to take a look at. ARM. Okay. This is in the chip sector, AI sector, anything AI, I'm taking a look at because it is just so bullish. It's just ridiculous. Okay. So a lot of money can be made, but also we want to manage our risk. Okay. So as far as a technical basis, right, forming this nice lower high here and it's waiting on NVIDIA. So if NVIDIA has amazing earnings, obviously from a charting standpoint, we could just see a retest of that high and a break of that high. So that's a big move. 128 all the way up to 164. That's a $40 move on ARM. As far as options, right, they are expensive as you see here, or relatively expensive. I don't really like to use too much of the term. They are pricey. Okay. They are pricey. So a speculative play will be looking at the price target at those highs and could potentially look at those highs at 150, maybe out here to this 200. If it just runs, it just rips, right? So a lot of potential high reward, but you want to manage your risk. So again, 60 bucks, 100 bucks. If you've got it to spend and it could potentially run up tremendously, you can see how much that contract could potentially be when it's in the money, right? 800, 900 bucks, turning 60, 70, 100 bucks into 800, 900 thousands of dollars if it goes in your favor. Okay. But again, as a reminder, we're all grown here that we react. Okay. We react. This isn't gambling, but hey, it can be fun sometimes where if there's opportunities and I'm willing to manage my risk, take the risk, then there's high reward. Okay. But I want to make sure that I am looking at things first before I just take trades and throw things in. Okay. So ARM, speculative play, but looks really good, really high, a lot of volume, a lot of eyeballs on it. Okay. Sound. Okay. Another AI, right? You can see this one is very low price here, but high volume, fairly high volume and high interest on these contracts in the money. So you can see fairly cheap here. Again, for those of you that are new, you may say, well, this is 40 cents. You're managing 100 contracts. As a reminder, you're managing, 100 shares within one contract. That is why I am timesing it by 100. So this is $40, $30, $60. Okay, get the drift. That is how you can make a lot of money with options because you don't have to buy 100 shares. You're managing one contract of 100 shares. Okay, so sound, right? Keep an eye out for that, forming a nice bullish candle here in consolidation on a daily. Okay, consolidating, waiting for NVIDIA earnings, and it could absolutely rip out of here potentially and just retest that high. So I'll be looking at in the money contracts here, 40, 60, potentially could, throw this in as a lotto play if NVIDIA beats its earnings and just, have it in there, right? Who's to say, right? It could run to $4, $5, $6 potentially if NVIDIA absolutely kills its earnings. Okay. You see these highs, previous highs up to 5, and maybe even breaking above 5 and going up to 6, 7, 8, whatever it might be. Right. So there you go. Speculative play. Not going to go into deep on the whole of the company. You can do your own due diligence. Final thing, SMCI. Okay. I want to end off with a banger opportunity. If you've been familiar with it, why we don't chase. Okay. Had amazing earnings, super microchip company. Okay. In the chip sector, semiconductors, AI. Okay. Absolutely tremendous run up here. And this is why I'm very big on technicals. Okay. We don't chase because at some point, market makers or people that have been riding the wave ever since their earnings, maybe they got insider news. I'm not too sure, but guess what? They know something that you don't know, right? They've got more money than you have potentially. They can move the market whichever way they want to, and they will shake you out of your position. I have seen from Twitter and other platforms that people begin chasing this and throwing in calls each and every morning. You cannot do that when you are having a skill set like this, because at some point people are going to take their profits. And guess what? Friday was that day. It dropped from $1,000, $1,000 and some change, right, at highs, all the way down to 800. And you might be saying, well, Dr. B, how much money could you have made on the put side if you would have, traded that? Well, those options contracts, I don't even think they're available. Nope, they're not, from last week. We saw options contracts go from spending $100 for an option contract, right, all the way from that options contract to $10,000. So turning $100 into $10,000 in one day, right? And even more than that, you do the math. If you would have put $1,000 in, we've seen, $100,000 outputs, right? So there was big money to be made on the downside playing puts, right? Playing for it to go down. Now, if you'd have played calls that morning of, look how you would have been caught. Put in a call, it's going up. That's why you don't chase. It's already made its move. Wait till it pulls back. So what we can do is we can look for potentially, again, speculative play, and options contracts are very expensive here, right? If you can see that NVIDIA earnings are coming up. So it may get bought back up and we run back to highs, 1,000 plus, or it may continue to sell because market makers want it even lower, right? So it may sell potentially back down into 600, 500, right? So that's a possibility for it to continue lower. So if I go into options contracts and I'm looking for maybe a lotto, potentially something that, I'm willing to lose, or risk, I should say, risk, I come down here to this 500 contract and it's $200, right? Decent volume on it. So interest, but there's other people looking at this contract as well, right? For that 500 psychological level, right? So that's a potential option that you could look at. Just saying, throwing it out there. That's why I wanted to leave it to the end. All right. But what we do in here is we trade with strategy. We trade with conviction and understanding of fundamental and technical analysis. If you enjoyed this video, thank you so much. Please like, share, comment down below what your favorite ticker is, where you're tuning in from. I'd love to hear it. Check out the links below as well, as far as joining our Discord. We do have a free trial, as well as some of the other potential links that you'll see. Joining Webull, get you some free shares. Joining Robinhood, get you some free shares. And I'll see you all in the next video. Thank y'all so much. Peace, love, and blessings.